It's Tuesday, August 8th. You're watching the Market Comment by Mario Hadjikyriacos here at XM.com. I'm Christina Marujos. The slowdown in the world's second largest economy seems to be deepening as the dual crises in the manufacturing and real estate sectors have dampened growth momentum. China's trade data released overnight revealed a worsening contraction in exports and imports, which is a warning that both international and domestic demand is losing power. Chinese authorities have unveiled a plethora of stimulus measures lately to counter the economic slowdown, but the scope and size of these policies has underwhelmed investors as they seem to lack the firepower necessary to truly kickstart growth. Investors responded by dumping China-linked assets, with oil prices and Hong Kong equities taking the most damage today, alongside currencies of economies that rely on Chinese demand to absorb their commodity exports, namely Australia and New Zealand. If China's inflation stats tomorrow confirm that the economy has fallen into deflation, these moves could persist. The US dollar advanced against most of the major currencies on Tuesday, boosted by a general flight to safety that was also evident in the bond market as global yields edged lower. Looking ahead, the main event of the week will be the U.S. inflation report on Thursday, which could inject some volatility into global markets, as there is some scope for higher than expected CPI prints. Commodity prices rose steadily in July. Business surveys revealed a reacceleration in inflationary pressures, and the Cleveland Fed's inflation nowcast model suggests that both the headline and core CPI rates could come in much hotter than what economists expect. Coupled with U.S. Treasury increasing its debt issuance, both in size and duration, a hot CPI report could put upward pressure on U.S. yields, helping to revitalize the dollar. Elsewhere, the Japanese yen came under renewed selling pressure following the release of the nation's latest wage growth numbers. The yen usually shines on days when global yields and stocks are falling, so its underperformance today suggests that traders interpreted the softer wage data as an obstacle to further policy tightening by the Bank of Japan. Stocks on Wall Street staged a comeback on Monday. The S&P 500 gained nearly 1% to more than erase its losses from Friday, even as Apple extended its post-earnings retreat. That said, futures have turned lower again today, likely spooked by China's worsening slowdown. Finally, gold prices have resumed their retreat. A hotter than expected CPI report on Thursday could exacerbate gold's troubles, turning the spotlight towards the $1,900 region, where the 200-day moving average has also converged. This was today's market comment here at XM.com.